Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I talk about current events for the everyday investor and home buyer. Our topics for this week: topic number one, landlords.co.nz on the 15th of May, sticky market for investors, first home buyers in control. Second topic from Good Returns on the 16th of May, ComCom told clawback periods need to be reduced. Third topic from RNZ on the 13th of May, rents, fuel and food holding up inflation. Topic number four from RNZ on the 16th of May, buyer's market, property resale profits are down. Topic number five, stuff from the 13th of May, $1 million home at age 25, could house hacking work for you? So first up this week from landlords.co.nz on the 15th of May, sticky market for investors, first home buyers in control. Many property investors remain out of the market despite the reinstatement of 80% interest deductibility for landlords and the reduction of the Bright Line test from 10 years to 2 years, effective from 1st of July this year, according to QV. Operations manager James Wilson notes that the impending debt to income restrictions will likely further limit investors' ability to purchase properties. But in my opinion, it's not going to make a difference until interest rates reduce significantly. At the moment, the high test rates that the banks are using has a much harder impact than the debt to income restrictions that are proposed. Residential property values have plateaued nationwide with high domestic inflation, rising unemployment, low business confidence, and significant cost of living pressures. Waikato valuer Marshall Wu highlights that these financial strains are leading to lower savings rates and increased uncertainty in making high commitment decisions like buying property. Auckland valuer Hugh Robson observes that people are more focused on job security and managing living costs than on purchasing property, which is understandable. Active market participants are seeking bargains and making lower offers, which is driving prices down. Wilson adds that an excess of real estate listings is contributing to price declines. While a flat market is expected over winter, it could provide a stable base for recovery once interest rate pressures ease, potentially by late this year. In the meantime, mortgage holders are finding ways to cope, with banks offering support where possible. First home buyers have an advantage if they have stable jobs and financing, as they can take their time and choose from numerous options. On the economic front, Westpac has revised its inflation forecasts, expecting domestic inflation to settle slightly above the long-term average, but not at the 2% target. They are predicting that the OCR will stay at 5.5% until February next year, with possible cuts if inflation in the labour market cools sufficiently. Chief Economist Kelly Eckhold warns of a challenging year ahead for households and businesses with weak growth and necessary labour market adjustments. Global economic conditions remain weak, but some positive signs are emerging. Despite high inflation and past interest rate hikes peaking, the Reserve Bank of New Zealand is likely to maintain pressure to reduce inflation amid weak growth. Those hoping for significant immediate OCR cuts may be disappointed. My thoughts on this are nobody really knows what's going to happen, including the Reserve Bank, until they receive all of the latest information. So my gut feeling is that we will see OCR cuts sooner than a lot of the economists are expecting. I would be very surprised if we don't see OCR reductions before the end of this year, because all evidence so far is pointing that we're heading in the right direction, and there's a chance that we may have overcorrected rather than not corrected enough. Topic number two from Good Returns on the 16th of May, Commerce Commission told clawback periods need to be reduced. Mortgage advisors are urging the Commerce Commission to shorten clawback periods for commissions, aligning them more closely with Australian practices. At the Commission's hearings on personal banking services competition, advisor Patricia Marsden emphasised that New Zealand's 4-year clawback period is excessive compared to Australia's 6 to 12 months. Commission Chairman John Small highlighted the numerous complaints regarding clawback provisions. Some bankers claimed that they wouldn't enforce clawbacks if loans were repaid early due to unexpected events like inheritances, but Marsden argued that New Zealand banks still consider 4 years as short term. She noted that various life events within 4 years could make holding a loan detrimental, potentially compromising advisors who face clawbacks in these situations. Small expressed concern that some lenders fail to notify brokers when a customer switches advisors or repays a loan early. Bank of New Zealand CEO Dan Huggins said it would be difficult for the bank to provide such warnings, although I don't know why. They could just make it a standard clause. Anytime someone's looking at repaying a loan early, they could just have a standard clause saying, please check with your mortgage advisor prior to doing this if you have one, because there may be a clawback fee involved. I don't know why that would be so difficult. An ANZ Bank New Zealand representative mentioned that early loan repayment doesn't typically trigger a clawback, as discharge processes involve legal oversight. Mortgage advisor Jeff Royal recounted a case where a client was assured of no early repayment charges, but was later billed $5,500, which included a commission clawback. The hearing also considered whether advisors should disclose both accredited and non-accredited lenders, as required by the Australian Securities and Investments Commission, ASIC or ASIC. While some advisors were open to this transparency, the majority opposed it. I'm not quite sure why. I mean, most mortgage advisors are accredited with as many banks and non-bank lenders as they can. So, yeah, I don't know why there would be opposition to that. Anyway, if you would like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I'll discuss strategies for successful investing from my perspective as an experienced property investor and a financial advisor. And these events are available live, online, or in person in our office in Ellerslie, Auckland. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and you'd like to find out more about how we can help you to reach your financial goals, you can also book a no obligation phone call or meeting with my husband, Paul Roberts, via the website. And feel free to spread the word. If you've been to one of our events and enjoyed it, then make sure that you let other people know that it's worth the visit. Third topic for this week in review from RNZ on the 13th of May, rents, fuel and food holding up inflation. Inflation pressures slightly increased last month with rises in food prices after 3 months of decline, along with increases in fuel and rents. According to Stats New Zealand's latest data, food prices rose by 0.6% compared to March, marking a 0.8% increase from a year ago. While fruit and vegetable prices decreased, other food categories, including groceries, particularly chocolate, potato chips, and olive oil, experienced over 1% increases. So chocolate could be due, there's a bit of a shortage in cocoa worldwide, apparently. Stats New Zealand's Consumer Prices Manager, James Mitchell, noted that stocking up on fruit and vegetables became more affordable for the third consecutive month, while purchasing other food items and dining out became more expensive. Food prices account for nearly 19% of the CPI, the Consumer Price Index, which is the primary measure of inflation. Rents, which are the second largest component of the CPI, saw marginal increases over the month and a 4.6% increase from a year ago. So clearly, we still need more landlords in New Zealand because with rents increasing at that rate, it's not great for tenants and it's not great for the war on inflation either. So get amongst it. Come to one of our free events and learn how to reduce the risk. Petrol prices increased by nearly 2% in the month and were up by 15% compared to last year, whereas local airfares decreased by 5%. ANZ economist Henry Russell acknowledged that the price rises were stronger than anticipated, particularly in more volatile product categories, but cautioned against overinterpreting the data. He maintained confidence that headline inflation would return to the Reserve Bank of New Zealand's target band of 1 to 3% in the third quarter of this year, despite these fluctuations, which would indicate that, we might see an OCR reduction in the third quarter of this year, which, to be fair, is where I'm sort of predicting things are going to start reducing, not before August at this point, because the data hasn't come in as much as I would have hoped it would have earlier. Topic number 4 from RNZ on the 16th of May, buyer's market. Property resale profits are down. Property resale profits have declined amid a shifting housing market favouring buyers. According to CoreLogic's latest pain and gain report, the proportion of properties resold for a profit dropped slightly to 92.9% in the first quarter of 2024, down from 93.5% in the previous quarter. I mean, I think it's important to point out that it's still 92.9% that sell for a profit. That's important to know, isn't it? This trend reflects challenges in affordability and higher mortgage interest rates, reducing buyer activity. Chief property economist Calvin Davidson noted that although resale performance has decreased, more than 9 out of 10 properties are still sold for a gain, with profits consistently around $300,000 since quarter two of last year. However, Davidson emphasised that not all gains translate into cash windfalls, particularly for owner-occupiers recycling equity into their next purchase or investors exiting the market. The North Island saw the largest gains in property sales, while main centres experienced mixed results. Looking ahead, Davidson predicts a modest increase in sales volumes and house prices for 2024, given ongoing affordability measures and high mortgage rates. This market environment, coupled with ample listings, is more favourable for buyers, but less encouraging for sellers. So again, it's like the whole country's gone on sale in the property market. So why would you wait any longer? Interest rates are likely to come down, but you don't need to wait for that to happen, because when that happens, there will be more buyers in the market, more competition, and that increases the chance of house prices increasing further. Topic number 5 from Stuff on the 13th of May, $1 million home at age 25. Could house hacking work for you? Connor Rensford, a 27-year-old quantity surveyor at Generation Homes, understands the importance of home ownership firsthand. 2 years ago, he purchased his first home in Milldale, North Auckland, where he had his company build a custom home tailored to his budget. Rensford utilised a creative strategy to secure an additional $80,000 in lending by having future flatmates commit to paying rent through a signed agreement. It's actually quite common that first home buyers have tenants or have flatmates that will help contribute to paying the mortgage, and that can increase your provable income as far as getting a mortgage goes. His home, a 4-bedroom, 2-storey house on a 350 square metre site, includes living arrangements where he and his partner occupy the downstairs bedroom, while a couple rents 2 rooms upstairs and their own bathroom, paying approximately $550 a week for rent and utilities. To afford the home priced at $1.04 million, Rensford used his substantial KiwiSaver balance of around $190,000 as a deposit, supplemented by financial assistance from his parents. He acknowledges the privilege of receiving parental support, considering it an early inheritance. And, I think it's great when parents are in a position to be able to help their children get their foot onto the property ladder. So, well done. If only everyone was quite so lucky, it would be great, wouldn't it? But, no disrespect to Rensford whatsoever. I think he's done a great job here, and having his parents help is absolutely a smart choice to get into a property at that value. Rensford's journey involved diligent saving from a young age, which I think is admirable, including working multiple jobs while studying at university and living at home during the COVID pandemic to reduce rental costs and improve his living standards. Generation Homes referred to Rensford's approach as house hacking, highlighting the role of flatmate income in helping first home buyers navigate mortgage requirements. Auckland North Managing Director Peter Suckling emphasises the benefits of shared living arrangements for achieving home ownership, catering not only to younger generations, but also to those seeking intergenerational living or home offices. Despite his current setup, Rensford's long-term goal is to purchase a home on a lifestyle block, eventually living without flatmates. However, he views his current situation as a practical stepping stone towards achieving that dream. And good on you. Good job. A buyer's market is good for investors and first home buyers because there are more houses available than people looking to buy. This means that buyers can negotiate better prices and terms. Investors can buy properties at lower prices to grow their investments and increase the rental return, while first home buyers can find more affordable homes with less competition. Make the most of your opportunities today. Join me at one of our free events called How to Succeed with Property Investing. During these 2 hour workshops, I cover off recent property market data. And as an experienced property investor and financial advisor, I'll share valuable insights and expert tips to help you on your journey. Our free events cater to all levels of property investors and first home buyers. And I'll tell you more about how we help our clients to achieve their financial goals too. So if you're interested in finding out more about what we do, visit propertyapprentice.co.nz today to secure your spot and register for one of our upcoming events. Alternatively, you can book a no obligation phone call or meeting with my husband, Paul Roberts, through our website. Thanks for listening.